Hey, Tim Sykes here, and I am recording this video lesson on a Friday, but I'm going to post it on the weekend so that you have extra time to watch it and learn from it so that there is no misunderstanding, because this is the single most reliable pattern right now in the entire penny stock market. Doesn't matter even if you have like $1,000 account. This is the pattern where you can grow your account by 20, 30, 50, 60% inside of an hour. I know that sounds like BS. I know it sounds crazy, but it keeps happening again and again and again. So please, if you understand me at the end of this video lesson, and I want you to watch it all the way through, but leave a comment saying, this will happen again, okay? This will happen again. 4 words, and only leave that comment below this video lesson if you truly understand it by the time I'm done, because this play, the opportunity is gone. You missed it. Some of you guys captured it. Some of you guys witnessed it. But most of you guys missed it. And it's because you weren't prepared. It's because you're not following my instructions about studying the past. It's because you're not, really listening to me. And that sucks. I'm here to try to help you. I'm here to try to get you guys learning where the opportunities are. And while all of Wall Street, all the big money tries to make 10 or 15 or 20% in the year, and if they make 20% in the year, that's a fantastic year for pretty much anybody with big money. Those of you guys with just a few $1,000s cannot afford to just make 10, 20% per year. It's not going to move the needle on your wealth. It's not going to give you, what you really want. Sorry, there's alerts going off right now. This is a live video lesson when the stock market is open. But I just locked in roughly $6,000 in profits here. Okay, and I sold way too soon. I coulda, shoulda, woulda made 20,000. I don't care. I don't mind selling too soon. I don't mind playing it safely, because playing it safely and selling too soon has made me $4.6 million over the years. Okay, and sometimes I lose. Lately, I've been trading sloppy. If you've been watching my video lessons, I've had a lot of losses. I've been getting a little sloppy. And this trade, right before this, I said, look at this. Cut my losses on this one. Almost forgot about it. I'm way over trading, but at least I'm taking small losses. Got to get more disciplined. I'll be rewatching my How to Make Millions DVD this weekend, okay? That was my mindset before I just made this trade. And I should mention that, before I made this trade also, I was about to take a flight, and I just missed my flight. This is Friday. I was actually going to give a live webinar tonight with my friend Lewis on how to grow your social media, which is another strategy, I think. I just missed that flight. So I'm going to try to do that webinar remotely, but I missed it in order to do this trade. And I miss life events sometimes to do trades. I missed my college graduation. I made about $12,000. So this happens again and again and again, because when there is the right pattern, when there is such easy money, even when I mistime it, this is my biggest freaking short-term trade in the past year. And I just took roughly a third of the profits that, anybody who times it perfectly will get. But this is the pattern, okay? You're waiting for the big dip. Let me show you this. It's been running up gradually, got the big dip, got the big bounce. Let's just do some math here. The low was 195, and it got up to 355. So let's do some math here. Here's my calculator. 3.55 minus 1.95. From bottom to top, it is an 82% winner from 11:50 a.m. until 12:28 p.m. And mind you, I'm trading from a location that does not have good Wi-Fi. That's why I'm using my eTrade Pro as backup, and I'm not using Stocks to Trade. I should be using, Stocks to Trade. So I don't have the best tools. I'm not in the best situation. I'm trying to catch a flight, and I'm still making $6,000 because I'm fucking prepared. And that's what I want for you guys. There was 82% you can make in 30 minutes if you're prepared. And, even if you miss the exact top, still it's 330 by 340. I was in here and I was out right here. I played it so safely because I've been trading so sloppy, and I wanted to just lock in the gains. This is an amazing lesson for me. I'm going to watch this lesson again and again and again, because this is the pattern that I should be focusing on. First, let me show you how I knew this was going to happen. I know that sounds cocky. You never know exactly, and obviously I sold way too soon, so I don't know exactly how it's going to play out, but I know the setup, and knowing the setup is half the battle. Here is my watch list. I send this out every single night. I send this out at 1:18 a.m. It's all time stamped. I didn't go back and edit it. But I said EMMD is now very overextended. But unlike the early shorts like me who simply cut losses, I was shorting it earlier, by the way. This is my kind of a pump looking chart where you get the first big red day and then you normally short, normally it fails. It doesn't break out. This is kind of a stronger pump than I'm used to. But when there's one big red day, there's usually another red day. So I've been shorting it, but I cut losses quickly in the twos here because I was wrong, and that's fine. I've had a lot of sloppy trading. As I said, cutting losses is okay, and it's key. But now I said, look at this. I'm very thankful for, aggressive short sellers. There's a lot of short sellers who don't believe in cutting losses quickly, and they are getting absolutely massacred on plays like HTGM right now. HTGM just keeps going, and they're trying to make a fundamental case of how HTGM is worth $1 or $2. Hey, dumb fucks. These stocks don't move on fundamentals, okay? You can make your fundamental case, tell it to the lawyer, tell it to the judge, because these stocks don't move based on fundamentals. They move based on, first, price action, volume, and this stock has traded 40 million shares. The fundamentals don't matter. EMMD, no fundamentals also. So why should you buy a stock with no fundamentals? Because when the pattern is right, you can predict it. I said this, I'm thankful for the over-aggressive short sellers. And I said, since there probably won't be any shares to short, it'll be an amazing dip buy opportunity if there's a big enough crash, so watch it closely. So I said this about, 10, 11 hours before it actually happened. So am I psychic? How do I know this? First of all, I didn't know it was going to happen today. This has been my commentary, for the past few days where I'm waiting for the big crack. I would love to short it, but usually there's no shares to short of these absolutely perfect pump-looking charts near the top. So then the opportunity is you wait for the big crash, you are prepared, you're looking at it, and then you strike while the iron is hot. Let me just show you my chat room right now, stream. So before I even bought and alerted this stock, I specifically said, where was it? 11:51, time-stamped, okay? And this was after I had cut my losses, like an hour afterwards. I had just a, crappy trade on an illiquid stock on IHRT. I was shorting it. So my mindset was not very good. But I said, I knew immediately that I would get excited. I said, ooh, baby, watch EMMD, perfect number 5 pattern coming up from my Sykes frame guide. For those of you who don't know, this is my framework guide, penny stocking framework. This is required viewing. I go over my 7-step framework. This is a perfect number 5. Perfect, 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 perfect number 5 pattern. Okay? I knew that at 11:51 a.m. 11:51, by the way, is right here. It was actually like a minute or two before it bottomed. How did I catch the exact bottom? Because I was prepared. I was waiting for it. I didn't see it here at 3:30 or 3:20 or 3, but I did see these red bars. Excuse me. Look at these red bars. This is pure panic selling, okay? The key is dip buying panic on an uptrending stock. It did this once before, and it dropped from 240 all the way down to 50 cents, and then it bounced to $1.50. Last time, it nearly tripled, okay, in a day. So I don't know what it's going to do this time. I think actually the bounce, this is probably about it. But you can predict the bounce after you get this panic. Let me just show you some examples. So this is, the chart pattern that I took a picture of. Another example, HADV. So HADV had the same kind of multi-day run and then a big crack down to 3 and it bounced $1. Let me show you a quicker one. This one was a quicker bounce, but you see the panic down to 3 and you see the bounce up to 380. Same exact chart. Too many things going on here. I'm getting into real estate. I'm studying. CNAB was another one. Look at this. Okay? 270 down to 150. Red bars, morning panic. 150 up to 220. This is all from 9:50 a.m. to 11 a.m. 50% bounce. CNAB was another one. Too many things going on here. I can't even focus. What was the other one? Hold up. Let me show you a video lesson. I'm going to keep it in here. I'm not even editing this video. I don't care. You can see how unprofessional I am. I'm not professional. I'm not prepared. But I know these motherfucking patterns. CNAB. This was it. How I made $1,000. Oh, CATQ was the other one. And here's another video lesson. I've done so many video lessons on this. This one was actually a little choppier on CATQ. But this is the same thing. This is from TimothySykes.com. The seemingly unchanging $1 million stock market profit pattern. This was from 2010. Same exact run up, same exact crash. Okay, and this was when I frankly back then I was shorting because the bounces weren't as good, but there still were bounces. So I'm always looking for these, multi-day run-ups and these crashes, especially on pumped up stocks because they bounce nicely. So the key is studying the past. Okay, this is video lesson 4,200. This is video lesson, oh wait, is that the same one? This is 4,210. This is 4,203. Okay. This is why you have to study my past video lessons. Okay? It is all in here. If you study the past, you're better prepared for the future. And I'm very proud of a lot of students. Here's Eduardo. He bought it at 197. So don't tell me you can't get filled at the bottom. I alerted it in the chat room before I even alerted my buy, before I even bought. Okay? So understand that I try to give a heads up so that you can understand. This guy made 60% on his overnight position on HTGM and now 60% on EMMD. Javier was playing the guitar when EMMD bounced and he made a quick $160 on a $2,300 account. It doesn't have to be huge. Okay, here's Claudia making money, $690. Most of my students are making money on HTGM today. That's the big winner. Alexin doubled his money on HTGM. Lloyd nearly doubled his money on HTGM, made $1,300. Let me just keep showing you more. Max put in $194, came out with $329 on HTGM. And, they sold this thing, they're buying in the 3s and they're selling in the 6s, and it goes to 11. Okay, this is not as guaranteed or as reliable of a pattern, but when you catch one of these things going supernova and you catch the short sellers, you can profit. Ken made in 10 minutes $960. Pretty freaking awesome. And I think he actually made more. This guy, Ken, made a funny video about HTGM and early shorts in their houses. You blow up your house. Here's Ken. This was his follow-up tweet. His best day ever. He made $1,700. These are all just tweets from today, by the way. And I'm filming this midday on a Friday. But I get a lot of tweets, and I love it. Look at this guy's performance chart. Personal performance over 6 months. He's made nearly 50%. So it's patterns like these that can change your account. How did I know 195 was the bottom? I didn't know. I don't know the exact thing. But when a stock is panicking like this with all these red bars and it starts bunching up here, you look at these red bars. They're very spread apart. 1, 2, 3, 4, 5, 6, 7 minutes where it goes from basically 314 down to 2. This is absolute panic. And you can see the volume is kind of crescendoing. So look for that volume crescendo and look around key numbers. Like what should this stock do? I mean, if it wasn't going to bottom, it should take out 190s very easily because there should be a lot of stop losses at 2, but it's already down from 4. So you're buying a stock down 50%. There's no news. First of all, I should mention, don't just dip buy anything. Sometimes these stocks drop, like there's a new expose, there's some investigation being launched. You don't dip buy those, okay? Because that means, guess what? Like the company actually is in trouble. There is no news when this stock drops like this. This is just panic selling and stop losses going off, and people who think that they're using stop losses and they're protecting themselves when in fact they're just creating panic. There's a lot of assumptions out there. If you use a stop loss, you're safe. Well, on OTC stocks, you can use your stop loss. It doesn't mean that you're going to get executed. And part of the reason why I don't use hard stops is because the market makers see all the stop losses. So if I'm a market maker for EMMD, I'm sitting here watching it drop a little, watching it drop a little. I see all the stop losses maybe at 3 and 275 and 250. People like to use round numbers for their stop losses. And I'm just like, well, I'm a market maker. Let me execute and, kind of take out the feet, swipe out the feet from all these people with stop losses. And guess what? That way, the stock will drop even more, and it'll be kind of a fantastic opportunity to dip buy the panic. And market makers do this. So if you're using a hard stop because you're not paying attention, because you're lazy, like most penny stock traders and investors, they just want to, ride the run up. And by the way, EMMD, even though the panic today, this is a multi-day, multi-week runner. This is one of the strongest stocks in the entire stock market for the past month. But that opens the door to a lot of lazy investors and traders who just think that it's going to go up and up and up every day. And then in case it doesn't go up, they use their hard stop, put in their stop loss, and they'll say, oh, I'm protected. You are not protected. You're just lazy and ignorant fools. And I'm sorry to call you out like that, but that's the truth. This is why 90% of traders lose money. It's because they're lazy. And if you are meticulous and you wait for the right opportunities like EMMD, you can profit off those lazy people. There are people who bought this stock, whatever they bought the stock, whether they're buying it at 150 or 2 or 3, and they think that they are just playing it safe. Even if they're not watching it, they're like, oh, well, I'm safe. I'm just going to use a hard stop. And that way, if the stock drops, I'll get out automatically. I'll get a nice little alert on my phone or whatever. And they think that that is the safe way to play because there's so many fake-ass teachers out there who, say, oh, just use stop losses. That protects you. That does not protect you, especially on OTC stocks. And this is what happens when you learn from the wrong people, specifically in the penny stock world. If you learn the wrong things and you learn what everyone else is learning, you will get crushed. This is why I love teaching. And this is why I love this pattern. And I sound all wise and knowing right now, but I had a shitty week. I had a shitty month before this trade. So this is a reminder for me, just as much as it's a reminder for you to focus on good patterns. Someone in the chat room said, I see now why, Mark Crook makes 80% of his profits from 6% of his trades. Let me just show you Mark Crook for a second. One sec, let me find his chart. Here is my upcoming millionaire student, Mark Crook. And many of you guys in the challenge chat room know him. He's giving exclusive alerts to my trading challenge students. He's making exclusive video lessons for them. And he's also giving webinars and mentoring trading challenge students. So not only is he profiting nicely, not only is his profit chart amazing, not only has this strategy changed his life, he was working in a cubicle job in Texas before he met me and started learning, he's also helping teach others. But if you go through all of his trades, and he's only winning 55% of the time, he has discipline problems like I do. We trade too many different setups. We're greedy Jews, both of us. Let's be honest, right? We're taught this way from the very beginning. When most kids are playing with like little toys, we're playing with like dollar bills. I wish I were joking, but I can make Jew jokes. I'm Jewish. You can't, most of you. I make jokes, okay? I try to keep this thing fun and happy. Finance can get boring and cynical very quickly. But anyways, if you look through Mark's trades, you will see that roughly 80% of his profits come from 6% of his trades. And maybe I could do a little better. I definitely could do a little better. Waiting for patterns. Not like that. That was BNTC. That's another play that's spiking right now. That's irrelevant right now. Waiting for patterns like this. Oh, I typed it in wrong. I hate eTrade Pro. I really wish Stocks to Trade Pro worked better. on bad Wi-Fi. But anyways, this is the right pattern, okay? There's no other way to say it. And I need to do a better job waiting for these kinds of plays. I've been over trading, and this is a great, great lesson for me. So I'm going to watch this again and again, and I have to repeat myself again and again because there's nothing bad with, and there's nothing wrong with repeating something. Sometimes it takes you a few times to get it. A lot of you guys are too harsh on yourselves, like, oh, I missed this play, I saw it, but I wasn't prepared, or I saw it and I had a small position. I just sold this thing. I was selling it in here in the 230s. How pathetic do I look? Okay, it went to the 330s. I missed out on $15,000 more. And this is my best trade of the past year. So think about that. If I miss out on $1 a share and this is my best trade of the year, what am I doing all the other times? That is trading, okay? You don't have to catch the exact bottom and the exact top. But if you have a plan, if you have a pattern, and mind you, this pattern works for me, it might not be your favorite pattern. For me, I think this is a great pattern. But we all have different personalities. So you have to find a pattern that works for you. I show you these patterns not so that you can, follow me and follow alerts. I don't want you to follow me. I don't want you to follow any alerts. And the good news is a lot of you guys are getting that. But the key is understanding that patterns like this happen. And it's not due to the fundamentals, as so many absolutely insane short sellers think. This pattern is caused by market mechanisms, namely stop losses. Dip buying into panic, a gigantic morning loser, okay? Or this was kind of more like midday. Usually it happens near the market open, so this was a little different. But I'm going to be posting some interviews shortly, not just with Mark Crook, but also one of my upcoming millionaire students. His name is Dux, D-U-X. He's also in the Trading Challenge chat room, giving exclusive alerts and mentorship, and I can't thank him enough. He's turned 27,000 into over 900,000 in 1 year. And he, in this interview that I'll post shortly, he says he's only made his money on 3 or 4 basic patterns, okay? And this is actually one of his patterns. And I said, Dux, you better have nailed this. And he missed it. He was trading with ZAIS, but he said he made like 40 grand on ZAIS. So he's forgiven. But you don't need that many patterns to get rich. And you don't need to trade these stocks perfectly to really grow your account. If you have a smaller account, let's say you buy freaking 1,000 shares. You don't necessarily have to buy 15,000 shares. You can buy 1,000 shares here in the low twos. So you're putting in roughly $2,000, $2,200. And within an hour, you're up $1,000. Okay? Theoretically, this should be impossible. If penny stocks were truly as random and, unpredictable as the world seems to think, there's no way that you can put in $2,000 and come out with $1,000 profit inside of an hour. How do you spot these? That makes no sense. This is the lotto. Of course, some people are going to win, but most people are going to lose. No, fuck all of that. Fuck all of those assumptions. This pattern happens again and again and again. And I have over 24 examples just in the past few months. And it's almost exact. It's eerily exact. Okay? And I don't want to teach you to memorize specific patterns, but this one seems to really work because of the stop losses and because, frankly, when it fails to break below a key level convincingly, like it did break $2 a share. It wasn't like there were a ton of dip buyers here at 201 and 202 and 203. It broke the key level of 2, but then it only got to 195. This is a weak breakdown, and I wish I had been filming live. You would have seen, the level 2. Right now it hasn't been trading much because this is midday, but what you also would have seen is that, there just weren't that many big bidders and there weren't that many big sellers here around 2. So when it's dropped, really quickly, all in pretty much 7 or 8 minutes because of stop losses, when it fails to break convincingly below a key level, that makes it a potential buy. And even though I sold my dip buy way too soon, even though I missed out on a lot of profits, and I know many of you guys do that, and you feel really guilty, and you're like, but I could have made so much more. I'm just glad that I nailed it. I called it ahead of time in the chat room on the watch list last night, and I executed it not perfectly, very imperfectly, but it's still my biggest gain in the past year. as I'm still working through, sizing up, trading with a bigger account. I'm still not used to it. I have $1 million at my command. This should not be my biggest win. But frankly, it's not easy to go back and forth between trading small and trading big. There's different, skill sets required. And so some of you guys who are complaining, oh, I want to trade with $1 million, Tim, I could make so much. Be happy when you're trading with a small account. Grow your account and work with your different account size at various, times during your journey. Because even if you grow an account, let's say from like 2,000 to like 20,000, that doesn't mean that you're ready to trade $1 million account. And for me, I have to really get used to, going back and forth, trading with a big account, trading with a small account. It kind of messes with your brain. So, I bought 15,000 shares. I mean, theoretically, I could have bought 100,000 shares and made $100,000 here. Okay, if I wanted to trade big, if I really wanted to, get aggressive, and maybe next time I see this pattern, I will, considering how well it's been working. But also the volume on this play is only roughly 1 million shares. So it's not the most liquid shares. And I would not, on this one, I would not buy 100,000 shares. I don't want to be 10% of the volume. But, I definitely probably could have bought like 30,000 shares or 50,000 shares and obviously gotten out, safely. But I have had, as I said, a sloppy week. And all of my small losses are now wiped out. And this is the beauty of not just this pattern, but also having a good trading plan where even if I'm trading sloppy, and I know it, I recognize it, I specifically stated I've been trading sloppy, I need to go back and watch my DVDs this weekend. Even when you are trading sloppy, even when you make these mistakes, you can make it all back and more very quickly with one good trade. That is why I cut losses quickly. That's why cutting losses quickly is not optional for me. I know some of you guys are like, well, let me just be a little more aggressive. No, especially when you're trading sloppy, especially when you're beginning, cutting losses quickly is the only option because all it takes is one good trade like this to wipe away all your sins. Okay, I've been cleansed of my sloppy trading sins for this week and really for, the past like 2 or 3 weeks too. I had my biggest loss of a little over 5,000. This gain was bigger than my biggest loss. And that was when I went too big on PULM, even though I was right, 2 days later. So I was on the right track there, but I was sloppy. All my sloppiness is now forgiven with one damn good trade. And this damn good trade, I didn't even trade it, good or well. Okay? I captured roughly 1/3 of the profits. So you have to understand what I did right, what I did wrong. What I did right was I totally was prepared for this. I even alerted the chat room before I bought. So don't say that, it was too quick because you had to just be watching it. You had to be ready for it. And then, yes, the bounce is quick. I'm not going to lie. Like you only have like 3 minutes or 4 minutes to really get a good entry in the low twos. But even if you're buying it, 20 minutes later on this kind of a play, there's such, wide room for a margin of error, whether you're late on your entry or early on your exit. When a stock bounces 80% in 30 minutes, you can be 10, 20% late and you can sell 10, 20, 30% too soon and still have a solid profit. This is what I think a lot of, teachers in the stock market and a lot of traders are missing, where they go for these profits and they go for these patterns where there's just not much room for error. And they criticize themselves and they say, hey, why is trading so hard? Because they're, trying these little bullshit patterns where you have to kind of be precise. And sometimes, you can do that. But on plays like this, I don't have to be precise at all. And I still have my biggest profit. And for you guys as beginners, and those of you guys with small accounts, this is the kind of play that you need, where you have such a wide, margin of error. Okay, this is like a Major League Baseball player playing against a freaking T-ball baseball team. Like a bunch of kids, and you can just crush it. This is Dennis Rodman playing basketball against a bunch of midgets, and he just dunks on all of them. You have such an advantage if you wait for this kind of a play and this kind of pattern, and you're meticulous, and you trade like a sniper, and you're prepared because you're competing against tons of lazy penny stock investors and traders who just use hard stop losses, and they don't understand the game, and they don't understand that that opens up the opportunity. And I'm thankful for all those lazy people. I'm thankful that less than 1% of traders and investors actually want to study and trade like a sniper because they're easy to pick off with plays like this. Anyways, I'm repeating myself, but I'm just basking in the glory of my $6,000-ish profit. And it was just a frustrating week. I was really disappointed. You know, when you have these losses, even if they're small losses, it just sucks. It's just frustrating. So even though I sold way too soon, even though, you know, I could be celebrating like, I nailed it, I had a $20,000 profit. I don't care. Okay? A $6,000 profit is better than literally anything else that I've done short term over the past year, which is pathetic in itself. But all I have to do is wait for patterns like this and plays like this. So I'm going to watch this video lesson over and over again. And I think that I've explained every single angle that's relevant, and why, you know, frankly, hopefully you will be prepared for the next time this comes up. You have to wait for a multi-week, ideally multi-month runner. You have to wait for a big intraday crash, and then you have to be ready intraday. And sometimes you're going to miss a flight or your college graduation or something. But if you want high odds, 20, 30, 40, 50, 60, 70, 80% bounces within an hour, this is the kind of pattern that you need to wait for. Otherwise, you know, you can gamble on all sorts of choppy penny stocks and all sorts of stocks. But this is the kind of play that's worth waiting for. And I need to do a better job at that. I've been way over trading. And so I'm not just thankful for the profits, I'm thankful for the reminder. The market just gave me, you know, a big, nice reminder. Like, Tim, stop playing all this crap. You know, trading is hard. Most traders lose money. Most traders lose, and trading is hard and frustrating when you focus on the wrong plays, when you focus on the wrong patterns. If you're just trading all sorts of stuff, yeah, you want more than 3-day trades per week. And you hate the PDT rule because you think that, oh my God, trading is so hard and tough because I have to try, you know, like 20, 30 different trades just to get like a few good ones. When in fact, the opposite is true. If you over prepare and study patterns like this that work again and again, I mean, I don't know the odds. Actually, Matty Triforce Trader told me that the odds of shorting the first red day on a pump is 87%. So that's pretty good odds of success. This kind of a play, I mean, I don't win every single time. I mean, I remember CGRW during one of my live trading challenge webinars, and I kind of added a little too soon, and I was just, you know, trying to catch a falling knife, and I was down, you know, nearly 15 grand unrealized, but I kept adding because I knew that it would bounce, and I ended up losing, I think, like 700. And then, of course, it did bounce, and I could have made like 50 grand. So I'm not a perfect timer on this. It's not like this is going to win 100% of the time. But by and large, this is the single most reliable pattern that I know, especially for going long. You know, I do like shorting the first red day on pumps because you can get these kinds of, you know, panics. But finding shares to short is tough, and I know many of you guys don't like shorting. So if you're looking to buy, dip buying into panic without news. That's also key. Don't just dip buy anything. Don't be like, hey, Tim, I dip bought this stock that's down 50, 60%. Why did it not bounce? Oh, wait, they announced that they're under SEC investigation. So you have to be careful about just dip buying anything. But if you get these sell-offs that are based on stop losses all within a few minutes, and you are prepared and ready to strike, whether it's 15,000 shares or 1,000 shares or even 100 shares, or even if you're just paper trading using stocks to trade, which is also great practice, the key is witnessing these and learning from them and getting used to this kind of volatility. If people on the street, I went up to them and let's say, you know, random people, and I was like, did you know that you could make 80% on your money on a penny stock inside of an hour? 999 people out of 1,000 people would walk away and they'd be like, you're such a fucking scam, okay? But if I showed those same people and I made them sit down in a room and I showed them my 4,000 plus video lessons, and specifically probably, I would guess, 40 or 50 video lessons on this one pattern, and then I said, did you know that you can make 30, 40, 50, 60, 70, 80% on your money inside of an hour? If they actually watch these video lessons and focus on the right patterns, every single one of them would say, wait a minute, this is predictable. So this is my job, getting you guys to realize that this is real and getting you guys to realize that this will happen again and again, but you need to study the past. That's the catch. Everyone's like, oh, sure, Tim, it sounds so great to make 80% on your money in an hour. What's the catch? The catch is that you have to work hard and you have to study my video lesson library and learn the difference between good and bad patterns. And I'm still not even perfect. After, nearly 20 years of trading, I still screw up. So I need a lesson and I need a reminder every now and then, just as much as you guys do. But the good news is, because we're able to share this stuff, because you can see my screen, I don't look so crazy anymore. When I first started, trying to get my hedge fund going, and I said, oh, penny stock trading, everyone's like, no. People say penny stock trading, oh, Wolf of Wall Street, stay away. But once you actually start looking at these things and start analyzing, why did these patterns happen? Oh, stop losses from lazy people. Oh, that makes sense. Dip buying, multi-week runners. Promoters have to bounce them or else there's an SEC investigation. It actually makes sense. But you have to do the studying and you have to look into things. You can't just memorize a pattern. You can't just follow alerts. None of my top students, Stephen Dux, Mark Crook, Tim Grattani, Michael Good, together they've made what? Like $7-8 million in the past few years. Okay? And me, I've made nearly $5 million. So collectively, we've made over $10 million. None of us follow anybody else's alerts or picks. We all have our own little favorite patterns. And we do what works for our own personalities. So anyways, if you do understand what I'm saying, remember to leave a comment below this video that says, I see it. I think were those the 3 words that I told you? I don't even remember. But leave a comment if you want, if you understand what I'm saying with the 3 words, I see it, or whatever the 4 words I said earlier. I think I said 4 words. I don't know. I'm not prepared. I'm not professional, but I have good patterns. See you guys. Thank you very much.